Well, the dollar gained the most in 2 weeks versus a basket of currencies of 6 major U.S. trade partners. You had investors just buying up dollars as stocks plunge on concern about the global economy slowing, and again, that worry about those European banks. Let's get more on today's wild FX market ride and really what's next with Bob Sinche. He's global head of FX strategy at RBS Securities. So, Bob, does the gain in the dollar make a lot of sense to you today?
Well, in one sense, it does, Carol, actually. You know, if you think about U.S. interest rates, they are down at their lows. The Fed's says they're going to stay at those lows. And so there's really not much movement in terms of U.S. interest rates. But when you get some bad data and you get concerns about global growth, what actually happens is that interest rate expectations come down in the rest of the world. And so if you think of foreign exchange rates as being driven by interest rate differentials, in a very perverse way, this weak data here in the U.S. is actually bringing down interest rate expectations around the world, bringing down those differentials, and actually acting to support the dollar a bit. So it's a bit of a strange world here. Well,
you know, those metrics, those global metrics could continue for some time, whether it's, you know, we're worried about Europe and we're worried about global growth. So does that mean that the dollar continues to move higher in your view?
You know, I think it really depends on what happens to expectations. We don't think that growth is collapsing quite as rapidly as the markets may be reflecting now. To be sure, this is a European phenomenon. We are seeing some stress in the funding markets in Europe, and so that's creating uncertainty. Interesting on a day like today that despite some pretty good unemployment claims numbers and a rise in the leading indicators, the Philadelphia Fed index seems to dominate sentiment. So I think there's a lot of volatility during the summer. Again, we don't think things are quite as bad as they seem, but in the near term, certainly hard to buy a lot of currencies versus the dollar.
Hey, Bob, what are the hot crosses you're watching here? What are the trades that people are looking at outside the U.S.?
You know, it's pretty interesting. I think if you look at what's going on in FX, there's not a lot of movement in FX markets. I think the volatility has shifted over to the interest rate markets, certainly shifted over to the equity markets. But you look at a day like today where there's a collapse in equities and dollar-yen moved 10 pips. I mean, that's virtually unheard of. So I think, again, a lot of the action has been shifted out of the short end of the U.S. yield curve, out of the FX markets. It's showing up in equities and, of course, showing up in gold and commodities.
What about the Swissy, though? I mean, we saw the franc come down a bit from its record highs, but obviously the central bank there is still concerned and still talking about possible action. Do you expect anything dramatic out of them?
I think we've seen what we're going to see. They can add liquidity. Their balance sheet isn't big enough to take on global capital flows. So I think that the Swiss National Bank and the authorities have done what they can. They'll try to help companies in the domestic economy, but I don't think they really can take on global capital flows right now. Japan having a little bit more success at that effort. They're a bigger economy, a bigger balance sheet for the Bank of Japan. But I think that what we're seeing is that a general dislike for paper currencies, and again, that continues to point back to the alternative, which I think is gold, and there's certainly no central bank standing in the way of gold prices going higher.
But so no euro peg is what you're saying? No euro peg for the Swiss franc?
You know, that's great in theory. It's extremely expensive and difficult in practice. So we think the prospects of a peg to the euro are extremely low probability event.
Bob, I want to push a little bit on the yen. You don't see any further intervention there?
You know, they haven't had to. They've been pretty successful at what they did last week. They got dollar-yen up 3 big figures right back to where it was. I think it's remarkable how little the yen has moved. I think the closing high-low range this week is about 1/4%, despite some extreme moves in equity. So clearly, the speculative community just wants no part of dollar-yen right now.
What do you want part of? I mean, where would you be placing your bets at this point, Bob?
You know, I think you have to look at short-term gyrations here. We do think that some of the sentiment is being oversold. So some of the commodity currencies, Australia, New Zealand, might be getting close to buy levels. Probably a little bit too soon to step in there right now, but we do think those are the attractive currencies for the rest of the year.
Yeah, I was looking earlier at some secondary safe haven currencies, Bob, like the Singapore dollar, seeing a little bit more action. Do you think we're going to see sort of a broadening of the kind of currency safety net?
Well, certainly the Asian currencies as a block remain undervalued, whether that's China, whether that's Singapore, South Korea, etc. So I think on a trend basis, those are very attractive. The problem we found is that when markets get jittery, those currencies get sold off very aggressively, and there's not a lot of depth and liquidity. So I think what we're seeing in the summer markets is not a lot of depth and liquidity in some of those alternative safe haven currencies, a lack of interest in investing in some of the big liquid currencies. And again, I think that's why the currency markets are kind of sitting out a bit of this volatility right now.
What about the euro, Bob? I mean, I saw a JP Morgan analyst forecasting 130 in as little as 2 weeks. It seemed a little bit dramatic to me, but I've been surprised by the strength that you see in the euro dollar. What do you expect out of Europe?
You know, we look back, I think since June 8th, euro dollar has traded in between 140 and 145 every single day. We had previously expected a bit more of a rally out of the dollar, looked for euro dollar down in the low 130s by the end of the year. But with the slowdown in the U.S. economy and the recent Fed announcement, we've taken away that cyclical dollar rally. So we kind of think that somewhere around 140 to 145 is what we're likely to see for an extended period. Again, not particularly interesting right now.
Hey, Bob, thanks for weighing in on the currency trade today. Bob Sinche of RBS Securities, he's the global head of FX strategy over there.